Hello everyone and welcome back to our YouTube channel. You must be listening this a lot that the rupee is falling in comparison to the dollar. Today we present you a video based on the same. Why is the value of rupee falling? What is its impact on the foreign investment and so on. So let's get started. Why is rupee falling against the US dollar? Will it drop any further in the financial year 2023? The value of Indian rupee fell to its all-time low against the dollar. It closed at rupees 78.465 per dollar as of 27 June 2022. But what led to the sharp fall in the value of rupee against that of the dollar in the last few days? The global geopolitical crisis at the peak of Russian invasion of Ukraine has affected emerging markets globally with a 4 to 7% downfall in the currencies. Indian currency has similarly faced a 4% depreciation ever since the Ukrainian crisis began in February 2022. The unending crisis and supply disruptions, together with a stronger dollar index, surge in oil prices and dollar afflux from equity and bond markets have increased the cost of capitals, leading foreign investment institutions to pull out their investment and weakening the rupee. American monetary policies offering better interest widens the gap between foreign funds and affects the oil prices as well. The rising dollar index reflects that the US dollar is outperforming other currencies like pound, franc, euro, yen and rupee. When the dollar rises, it affects the pricing of all commodities like the American shares and oil barrels and depreciates the value of currencies like Indian rupee.
How the fall affects the foreign investment? Well, foreign investment is an important determinant of the strength of rupee in Indian equity market. एंड जब यही फॉरेन इन्वेस्टर्स नेट सेलर्स बन जाते हैं तब हमारी इंडियन करेंसी डिप्रिशिएट होना स्टार्ट हो जाती है. The foreign institutional investors have shelled shares worth 4,000 crores, pulling out more than 2 lakh crores from the Indian market this year, which is in itself equivalent to their total investment over the last 12 years. And this is caused due to the rising interest rate in the world, which is instigating the foreign investors to pull out money from risky markets like India, जहाँ पे currency continuously depreciate हो रही है. The stronger dollar index is also discouraging the foreign investors from investing in the emerging markets, as the US is considered a safe haven for these investors as compared to markets like India. The rupee's fall is affecting the economy by making the imports costlier and stoking inflation in the country, which is already out of the RBI's comfort zone of 2 to 6%. So, sectors like FMCG and metal and banking are among others who are at the receiving end. However, export-oriented sector stocks like IT, pharmaceuticals and especially chemicals and textiles can be better bets as weaker rupee initiates the exports. How does this affect the stocks and bonds market? The effect of the decline in Indian rupee has been resonated at both the domestic equity markets, where top 30 stocks Sensex lowered at 52,000 points from 1,400 points or 2.69%, while the National Stock Exchange operated Nifty dropped from 400 points or 2.59% to 15,000 points. The benchmark S&P BSE Sensex index slipped about 2.8% as FII withdrew about $24 billion from domestic markets this year. India rating said, as this is unlikely to reverse anytime soon due to volatile commodity prices and persisting global supply disruptions caused by the Russia-Ukraine conflict. Indra believes the Indian currency to depreciate by 4.9% and average 78.19 per US dollar in financial year 23. Ananday Banerjee, the vice president at Kotak Securities, said since the RBI policy on May 4, the rupee has flipped from being an outperformer to an underperformer. The RBI remains an aggressive seller of US dollars in spot and forward markets. The sharp plunge in forward premium is an evidence of that. Going forward, the dollar rupee can continue to drift upward at a slow pace. We can expect a broad range of 77 or 78.30 over the near term, Banerjee added.
Measures to mitigate the impact of fall. The Reserve Bank of India has sufficient reserves to manage the fluctuations, whereas hedging is a viable option for the importers to protect themselves, given the current hedging cost of 4% might limit the benefits. We hope that you liked our video. If you did, please like, comment, subscribe and share. Thank you.